Gold had just exploded past $4,400 at $71 per ounce. Silver jumped over 5%. Platinum surged nearly 6%. The precious metals market is in absolute panic mode. What you're witnessing right now is the best two-day rally for gold since mid-October. Nearly 3% gains on Monday, followed by another 0.5% today. Safe haven buying is dominating. This isn't speculation. This isn't theory. Major financial outlets published these numbers within the last 5 hours. Barron's, Reuters, CNBC, all confirming the same explosive story unfolding right now. Something triggered this massive flight to safety. Something that has investors around the world dumping riskier assets and piling into precious metals with an urgency we haven't seen in months. The catalyst? A geopolitical earthquake that happened just days ago in Venezuela. U.S. military action that captured a sitting president and sent shockwaves through global markets in ways most predicted. Before we break down exactly what's happening and why this could push gold even higher, understand that what unfolds over the next 30 days could determine precious metals prices for years. Stay with me because I'm going to show you the data behind this surge, the geopolitical crisis fueling it, and what major banks are now predicting for gold's future. Let's start with the numbers that just dropped. Gold futures hit $4,471 per ounce. That's within striking distance of the all-time record high set late December. After opening Monday at $4,368, gold surged nearly 3% in a single session. That kind of explosive move doesn't happen randomly. That's fear-driven capital allocation. Tuesday brought another 0.5% gain, cementing what analysts are calling the best two-day performance since the October rally. 2 sessions of sustained buying pressure pushing prices toward record territory. But gold wasn't alone in this rally. Silver, often called gold's more volatile cousin, absolutely exploded higher. Up 5.2% to $76.37 per ounce. That's a massive single-day move for silver. When you see that kind of percentage gain, it signals institutional money flooding into precious metals. Not retail investors nibbling, but serious capital. Platinum joined the party with a 5.9% surge to $2,269. All 3 major precious metals moving in lockstep tells you this is systematic safe haven buying. According to multiple sources, including The Guardian and Morningstar, investors specifically cited the Venezuela crisis as the primary driver. This wasn't about inflation data or Fed policy. This was geopolitical fear. Spot gold climbed nearly 2% on Monday to $4,411 per ounce, hitting a 1-week high. U.S. gold futures for February delivery gained over 2% as well. Reuters reported that as of early GMT Monday morning, spot gold had climbed nearly 2%. By the close, the gains held. That kind of sustained buying throughout a session indicates conviction. CNBC published their analysis, confirming that U.S. capture of Venezuela's president spurred safe haven demand. When mainstream financial media uses language like spurred demand, they're acknowledging panic buying occurred. European Business Magazine reported gold prices spiked nearly 2% as geopolitical risks in Latin America drove safe haven demand. Latin America rarely moves global gold markets. This was exceptional. Kitco News, the precious metals specialist outlet, noted that gold prices would likely follow oil's lead near term as geopolitics dominate the early days of 2026. Energy and metals intertwined. Investing.com reported that gold prices extended sharp gains in Asian trading Tuesday, pushing back toward record high levels as heightened tensions continued. Asian markets led the buying overnight. BBC News confirmed precious metal prices have risen after U.S. capture of Venezuelan President Nicolas Maduro increased investors' concerns about geopolitical instability spreading. Traditional media acknowledging market fears matters for credibility. Now let's talk about what actually happened in Venezuela, because understanding the trigger is crucial to understanding how long this precious metals rally could last and how high prices might go. January 3rd, 2026. U.S. military forces entered Venezuela in what the Trump administration described as a law enforcement action. They captured sitting President Nicolas Maduro and First Lady Celia Flores. This wasn't a covert operation. This was a full military strike with special forces, air support, and naval assets. The operation successfully extracted Maduro and brought him to U.S. soil for prosecution. President Trump announced the capture, stating that the United States would now effectively run Venezuela. That language, claiming direct control over a sovereign nation, sent immediate shockwaves through diplomatic channels worldwide. The United Nations Secretary General addressed the Security Council, calling this a grave time and raising concerns about violations of international law. When the UN speaks that directly, markets listen and react. The Guardian published commentary noting that Trump's military action in Venezuela undermines fundamental principles of international law agreed after World War II. Legal scholars calling this unprecedented in modern history. Venezuela's acting president, Delcy Rodriguez, was sworn in immediately after Maduro's capture. but Trump suggested the U.S. would maintain extended involvement in Venezuela, potentially including boots on the ground long term. NBC News reported that Trump told them he could launch a second military operation if Venezuela doesn't cooperate. The threat of continued military action keeps geopolitical risk premium elevated in markets. The Wikipedia entry for this event was created within hours and has been updated continuously. When Wikipedia moves that fast on geopolitical events, it indicates the scale and global attention this is receiving. CNN, NPR, Al Jazeera, and the New York Times all provided live updates throughout the crisis. When global media dedicates that level of continuous coverage, market participants assume prolonged instability ahead. Here's why this matters so much for precious metals. Gold and silver thrive on uncertainty. The more unpredictable the geopolitical landscape becomes, the more investors seek assets independent of government control. Venezuela holds the world's largest proven oil reserves. Any instability there affects global energy markets. Energy instability drives inflation fears. Inflation fears drive precious metals buying. It's a direct chain reaction. But there's another dimension. If the United States can militarily intervene in Venezuela and capture its leader, what does that mean for other nations? What precedent does this set? China, Russia, and numerous other countries condemned the action. When major powers view U.S. military action as overreach, it creates fractures in global stability. Those fractures benefit gold as safe haven. Investors are asking, if Venezuela today, who tomorrow? That kind of uncertainty doesn't resolve quickly. It lingers. And lingering geopolitical uncertainty provides sustained support for precious metals prices over extended periods. Now let's connect this to what was already happening in precious metals markets before Venezuela. Because this rally didn't start from nothing. The foundation was already built for explosive upside. Gold surged 66% in calendar year 2025, surpassing $4,500 per ounce. Silver outperformed with a 171% rise. Those are parabolic annual gains. According to multiple sources, silver hit an all-time high of $83.62 per ounce on Monday before pulling back. That's a record. We're now just $7 below that peak. The nation Thailand reported that 2025's gold rally represents the strongest annual performance since 1979, when gold surged over 120% amid the Iranian Revolution and Soviet Afghanistan invasion. History doesn't repeat, but it rhymes. 1979 was about geopolitical chaos in oil-producing regions. 2025 through early 2026, same pattern. Geopolitical chaos in an oil-producing region, driving safe haven flows. Precious metals were already elevated when Venezuela happened. They were consolidating after massive 2025 gains. Venezuela provided the catalyst for the next leg higher. Timing was perfect for bulls. Financial content sources noted that spot gold climbed over 2.5% on Monday, trading near $4,445 per ounce. This latest spike comes after already strong momentum. Reuters reported on January 2nd that precious metals kicked off new year higher after a robust 2025 rally. The year started strong. Venezuela accelerated what was already building as upward momentum. Silver advanced nearly 1% to $71.77 on January 2nd, after hitting that all-time high. Platinum jumped 3.5% to $2,125.80. The momentum was already there. The technical breakouts were forming. Venezuela was the fundamental catalyst that gave buyers permission to aggressively chase prices higher without fear of immediate reversals. Conviction builds on conviction. Now here's where this gets really interesting. Just hours ago, Morgan Stanley published a new forecast that should make every precious metals investor pay very close attention to what happens next. Morgan Stanley now projects gold will reach $4,800 per ounce by the fourth quarter of 2026. That's nearly $330 above current levels. That's another 7% upside. Reuters reported this Morgan Stanley forecast just 3 hours ago. The bank cited falling interest rates, Federal Reserve leadership changes, and continued buying by central banks and funds as primary drivers. The Epoch Times noted that Morgan Stanley lifted its 2026 gold forecast to $4,400 back in October. Now they've raised it again to $4,800, 2 upgrades in 3 months. Business Post Ireland confirmed the same forecast, noting that Morgan Stanley expects gold to exceed last year's records. When major investment banks raise forecasts after prices already surged, that signals conviction in higher prices. Jefferies Financial Group referenced Morgan Stanley's bullish gold forecast in their own research published just 1 hour ago. When one bank's bullish call gets cited by another bank, it validates the thesis. The Street reported that Morgan Stanley projects gold at nearly $4,800 per ounce by Q4 2026, with gains slowing from 2025, but still trending materially higher. GoldSilver.com noted that Morgan Stanley raised its long-term outlook on gold this morning, forecasting bullion could reach $4,800 per ounce by fourth quarter 2026. Fresh research matters. Multiple factors support Morgan Stanley's thesis. First, falling interest rates. Lower rates reduce the opportunity cost of holding non-yielding assets like gold. That's Economics 101 driving precious metals higher. Second, Federal Reserve leadership changes. As we discussed in previous content, Powell's term as Fed chair expires in May. New leadership means policy uncertainty. Uncertainty benefits gold as a hedge. Third, continued central bank buying. Countries worldwide, especially China, Russia, India, and Middle Eastern nations, have been accumulating gold reserves at record pace. That institutional demand provides a floor under prices. Fourth, fund buying. Exchange-traded funds backed by physical gold have seen massive inflows. When institutional capital allocates to precious metals ETFs, it removes physical supply from markets and supports higher prices. Fifth, geopolitical risks like Venezuela. Morgan Stanley published their forecast before the Venezuela crisis fully unfolded. Now that catalyst has emerged, their $4,800 target might actually be conservative. JP Morgan has even more aggressive forecasts according to IDN Financials. They expect gold to average $4,600 in Q2 and above $5,000 in Q4. Metals. Focus expects $5,000 by end of 2026. CBS News asked whether gold could hit $5,000 in 2026, suggesting that milestone is increasingly plausible given current momentum. Goldman Sachs has a price target of $4,900 according to Investopedia. When multiple major investment banks cluster their forecasts between $4,800 and $5,200, that creates consensus. Most analysts see gold settling between $4,000 and $5,000 per troy ounce in 2026, with caveats around Fed policy, recession risks, and geopolitical developments. That's wide consensus. Here's what this means practically. If you're holding gold or silver, the fundamental and technical backdrop supports continued gains. If you're considering exposure, understand that volatility will remain elevated throughout this environment. The two-day rally we just witnessed, best since mid-October, demonstrates that precious metals can move violently higher when catalysts emerge. Venezuela proved that geopolitical events can trigger instant safe haven flows overnight. But also understand that these gains don't move in straight lines. Gold hit $4,549 on December 26th. We're now at $4,471. That's a pullback before continuing higher. Silver's all-time high was $83.62. Now we're at $76.37. That's over $7 below the peak. Volatility cuts both ways. Rallies include corrections before resuming their upward trajectory. The key is understanding the macro environment. As long as geopolitical uncertainty persists, as long as central banks keep buying, as long as interest rates trend lower, precious metals have fundamental support. Venezuela adds a new dimension to that thesis. It's not just about inflation or Fed policy anymore. It's about what happens when major powers take unilateral military action in sovereign nations. If Trump follows through on threats of extended U.S. involvement in Venezuela, if he suggests similar action elsewhere, the geopolitical risk premium in gold pricing could expand significantly beyond current levels. Markets hate uncertainty more than they hate bad news. Bad news can be priced in. Uncertainty about future U.S. military interventions cannot be priced in. That uncertainty premium gets reflected in gold prices. Here's my take. The Venezuela catalyst is real. The safe haven flows are measurable. The two-day rally confirms institutional money is actively repositioning into precious metals as geopolitical hedge against rising uncertainty. Morgan Stanley's $4,800 forecast now looks achievable given the Venezuela situation. JP Morgan's $5,000 target looks less aggressive than it did just weeks ago before this crisis. Silver's 5.2% single-day gain is exceptional. If silver continues outperforming gold on percentage basis, we could see it test that 83.62 all-time high again soon. Momentum is building. Platinum's nearly 6% surge shows the entire precious metals complex is moving higher together. When all three metals rally simultaneously, it signals broad-based safe haven demand, not just gold-specific factors driving markets. The best two-day rally since October matters because October was when markets started pricing in Fed rate cuts and economic uncertainty. We're seeing similar fear-based buying now, but with geopolitical overlay. What happens next depends on Venezuela developments. If the situation stabilizes quickly, some safe haven premium could fade. If it escalates, or Trump takes action elsewhere, gold could make a serious run. Either way, the $4,471 level represents a technical breakout above recent consolidation. If this level holds as support, the next resistance is the all-time high near $45.50. For silver, holding above $75 is crucial. Break that level and we could see a quick test of $80. Above $80, the all-time high is just a few dollars away. Platinum's move to $2,269 is significant because industrial demand has been weak. This surge is purely safe haven driven, suggesting even industrial metals benefit from geopolitical uncertainty when they're also monetary. Here's what you need to watch. First, any developments in Venezuela. Trump's comments, UN Security Council actions, military movements. Each headline could trigger fresh buying or profit-taking depending on escalation trajectory. Second, watch central bank purchases. If countries accelerate gold buying as geopolitical hedge against perceived U.S. overreach, that institutional demand could push prices higher, faster than anyone currently forecasts or expects. Third, watch ETF flows. If money continues pouring into gold and silver ETFs, that removes physical supply from markets. Supply shortage meets surging demand equals higher prices. It's simple economics. Fourth, watch Fed commentary. Powell and other officials speaking about rate cuts, inflation, economic outlook. Any dovish signals support precious metals. Any hawkish surprises could trigger temporary corrections before resuming. Here's my call to action. If you found this breakdown valuable, if you now understand why gold just surged to its best two-day rally since October, hit that like button. Subscribe to this channel because we're covering every major development in precious metals, geopolitics, and economic policy. The Venezuela situation is ongoing. I'll be updating you as events unfold continuously through next week's. Drop a comment below. Do you think gold hits 4,800 by year end? Does silver make a run at $100? How high can this rally go? I read every comment. Share this video with anyone interested in precious metals, geopolitics, or protecting their wealth during uncertain times. The more people who understand what's happening right now, the better we all navigate what's coming. Gold near record highs, silver up over 5%, platinum surging 6%, Venezuela in crisis, Morgan Stanley forecasting $4,800. This is the precious metals story of early 2026.